Hello, I'm Angeline Ong, and welcome to Beat the Street, the show that gives you all the tradable news and data you need ahead of the Wall Street Open. Coming up, restarting the rally. US stocks rebound, but have they shaken off those sell-off chills? Nike shares dunked. Nike all-session shares falling after the company cut its sales forecast. And PCE watch investors eyeing those PCE numbers as financial markets price in a 71% likelihood that the Fed will cut rates as soon as March 2024. Now, good afternoon, I'm Angeline Ong, and welcome to this new edition of Beat the Street. Not long now before Wall Street starts trading. Just before we show you that, let's have a quick look at this breaking news that's now trickling through. We were looking out for the PCE index. This is the price index, which is the Fed's preferred inflation gauge, to show a 2.8% rise on an annual basis in November. And what we got instead was a number that's still coming out. We've only got the month-on-month figure. So we're expecting 0%. We got negative 0.1%. The actual year-on-year figure is not out just yet. We do have the core PCE month-on-month figure, expected 0.2%. We got 0.1% instead. And the PCE price index year-on-year figure is now out. We had 2.8% in view. That was what was expected. And we have got 2.6%, slightly lower than expected. Also, out durable goods figures, 2.2% was what we were looking out for. It was much better than expected, 5.4% for the month of November. So quite a mixed bag of results there in terms of economic data. Personal income figures also just out month on month. We were looking out for 0.4% for November. It was bang in line with expectations. Let's have a look at the US dollar basket to see if there is any move at all. Not much of a reaction there. Also looking at the Wall Street, which mirrors the Dow Jones Industrials, pretty much bang in line those numbers, the PCE and also the durable goods. So no surprise that there's not been much of a move there. It's weakened ever so slightly, but not by much. Now, just taking a look at Nike, because Nike is a big mover here on the IG platform, and Nike is also one of our all-session stocks. So Nike moving lower. If I can show you this here, check out that red bar. It's currently down some 11%, more than 11% now. This is after its disappointing revenue forecast. Its second quarter earnings per share came in at $1.03. That was slightly better than expected, but it was actually the forecast that the market zoomed in on. And the revenue forecast for the full year is now being cut, as Nike also said it would plan to cut costs by around $2 billion over the next 3 years, and said this is partly to do with a softer revenue outlook for the second half of the year. Now, looking at Nike's shares, it has moved higher since around the October period, but this is also partly to do with the whole index really shifting higher. In terms of other retailers, it's been a really difficult time, especially in the apparel space. Nike and many others facing higher materials costs, and also consumers starting to feel the pinch of high inflation. Nike says it's planning to simplify its product offering and also increase automation and the use of technology to drive greater efficiency. Another big story that we are watching out for you comes out of the banking sector. Canada has approved RBC's 13.5 billion Canadian dollar acquisition of HSBC's domestic unit. That's around $10 billion, or just above that. HSBC expecting to close the deal in the first quarter of 2024. This deal has been talked about for quite some time. It's now gone through. HSBC says it's considering a special dividend of 21 cents a share from the proceeds in the first half of 2024. HSBC shares in London up around 0.8%. Now, just checking in on Boeing as well. We talked about this story yesterday, but Boeing, keeping that in view because Boeing is an all-session stock on the IG platform. Also, the first delivery of its 787 Dreamliner to China since 2019 has landed in Shanghai. There was a lot of focus on this the prior session because the thought process is that the resumption of the 787 deliveries could open the or pave the way for the lifting of the 737 MAX freeze. And whilst we are talking about airlines, we've had quite a few moves in the US airline sector, namely American Airlines. Just bring up that chart for you because American has been tracking higher along with the other airlines. They're all signaling perhaps stronger than expected travel season. Many of these US airlines have risen ahead of the holiday season and also helping the sector falling oil futures. And one other space that could be see a lot of action or be hit later this session is the Chinese gaming ADRs. These are stocks that are to do with gaming, especially if they're exposed to the Chinese market. Some of these stocks you may or may not heard or have heard of. It's NetEase. There's the ADR for you. It's not trading at the moment, but you can trade it when the cash session opens. Roblox, also checking on that because this US gaming platform could be affected by this news. And it's really Chinese regulators announcing a wide range of rules aimed at curbing spending and rewards that encourage people to play video games. I can tell you that Dutch tech investor Prosus and French video games developer Ubisoft have both reacted to the news. That's Prosus. Take a look at the shares there in the Netherlands, sinking almost 16%, and Ubisoft, let's have a look at that one if we may. That also red candle there showing a fall of more than 3%. Now, gold could be something that's interesting for us as we head into the end of the year because gold has been moving quite rapidly, especially after that Fed pivot. Earlier in the week, we talked about gold from a technical perspective with the founder and portfolio manager of AUAG, Eric Strand.
The first answer is no. I mean, the participation is really low from the traders. So there's a lot of room to go now. And what is important is that we have established the gold over 2000 for a longer time. It has been going up and down around 2000, but now we get the feeling that we are over. And I think the target is 2100, and that's when it really starts to fly. So now it's a good time, I think, to position yourself. And we also see good inflows in our ETF for the gold miners. So it's just the beginning, I would say.
And thank you very much for watching, and have a really good festive season. Just a reminder that we had US November year-on-year PCE price index up 2.6%, slightly less than the consensus of plus 2.8%. And we maintain that we are keeping an eye on the US stocks as we count down because although we've had that blip in the last few sessions, we are seeing a resumption of that upward trend line towards year end. And that's the latest on IGTV. I'm Angeline Ong, and have a good and restful festive season.